We have Mohar Singh who's called in from Mumbai. Mohar, what's your question? How can we help you?
My question is that my wife had a property, had a flat in Pune, which we had sold on 9th of October 2015, and the capital gain that was coming was rupees 50 lakhs. 50 lakhs. 50 lakhs. Hello?
Yes, we can hear you. Go on.
Then she had a house in Lucknow, ancestral house. So that also was sold on 17 December 2015, wherein the capital gain was 1.64 crores.
Okay.
1.64 crores. Now, this amount we wanted to utilize to purchase a residential house in Mumbai, but the total cost, the total capital gain amount was coming to, as you know, 2.14 crores. So for this amount, we could not buy any suitable accommodation in Mumbai, despite our best efforts for about 1 year now. So, in the meantime, before filing our return for on 31st July 2016, where we opened capital gain account, two capital gain accounts on 19 July 2016, one for 50 lakhs, another for 1.64 crore.
Okay.
In the name of my wife. And these two capital gain accounts are existing there. And now I want that if I pay the income tax on these both the capital gains, can I do so at this stage now? And what will be the rate of? It is a long-term capital gain in both the cases. 50 lakhs and 1.64 crore is a long-term capital gain. Now, how much will be the income tax percentage?
So you basically want to know the income tax implications on the money that you've deposited in the two capital gain accounts. Am I right?
Capital gain account for the property that were sold.
For the property that you had sold, right?
In 2015 October and December 2015.
Yes, Mohar, we got that. Let me get in Suresh. Suresh, what are the income tax implications over here?
Yeah, so basically what happens, I mean, what you did was, right, that before filing the return, if you are not invested and you are not willing to pay the tax at that stage, you have to deposit the money in capital gains accounts, deposit account, which you have done correctly. Now the point is that once you have invested this amount, you have to hold it for 3 years, and at the end of 3 years, because that is a maximum permissible period either for purchase or for construction, if you have not still utilized at the end of 3 years, then when you withdraw the amount and you have to close the account, that is deemed to be income of that year, and it will be subject to tax at the rate of long-term capital gains. So like this will be in the financial year then 18-19.
So Suresh, what you're saying is till 18-19 he doesn't have to pay income tax on this because it's already in a capital gains account, and if he uses it before 18-19 he will not have to pay income tax. Is that right?
If he uses for purchase of property, he definitely will not be paying the capital gains tax, and of course he has to hold the new house for 3 years, but other than that, that will be exempt. Now if he wants to do before that, you have to approach the assessing officer to give a no objection. And that time, unfortunately, the way the law right now says that only on the expiry of 3 years in that year, if you have not utilized till that time, then it will become taxable in that year. But whether you can then revise the return, let's say if you give an undertaking that you revise the return for this last year and pay the tax, and on that ground he gives you a no objection to, to withdraw the amount. In that case, you will have to pay interest. You will not have penalty, but interest will be applicable. But that is up to the assessing officer while giving no objection what condition he puts.
Okay. But as of now, this year he does not need to pay any income tax because he specifically asked about the income tax treatment on the capital gains.
Yeah, no, the only question is if he wants to withdraw from the capital gains account scheme that money, that is not possible without the no objection of the assessing officer.
That he will have to go.
So either he has to go for two options, wait till financial year 18-19 when 3 year period expires, and that point in time when he closes the account without utilizing it for buying property, that point in time in that year it will have to be taxed as long-term capital gain. But if he wants to do before that, maybe you have to, when you approach the assessing officer, you have to tell him that you are willing to revise the return of last year, pay the tax and interest on that, and then the assessing officer gives you no objection to close the account.
Right.
Even
so
right now.
So it's a long winded process out there, and also what you need to understand is you will have to pay the tax then for the last year, not just for this year, you'll also have to pay it for last year. So you need to think through that decision that you're making and then actually think whether or not you want to withdraw money from the capital gains account.
Yeah, and also just one more point on that while this money is lying, there are two types of account. One is a saving account and there is a deposit account also. So if you are not earning interest on this, you can transfer the money to the deposit account as well. So at least in the meantime, you are earning some interest on
Exactly.
that. Yeah.
So you can make your money work for you.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.